Let's go from the simple income statement to show how indirect rates for bidding contracts are estimated. In this example, we're going to come up with bid rates for fringe, overhead, and G&A. The indirect rates we come up with will be used to compute wrap rates. Wrap rates are multipliers for direct labor. Within the multiplier, we're trying to price in a percentage for providing fringe that covers payroll taxes, leave, and group benefits, plus a percentage for overhead that covers the cost of supporting technical work, including facilities and support cost, plus a percentage for G&A to cover the cost of the corporate functions. Then we'll add a fee percentage or profit. We'll use your income statement to estimate what those costs are for your company and to compute those percentages. We'll use a budgeted income statement to forecast cost for future years. Let's start with figuring out the fringe rate. First, we'll take the cost on the fringe line. That's called the fringe pool. Second, we'll look at any of the lines that are for labor. We have direct labor, overhead labor, and G&A labor. So the sum of those three is called the fringe base. So take the fringe pool divided by the fringe base, and that is your fringe percentage. Next, let's compute the overhead rate. We'll take the cost on the overhead lines for labor and non-labor. But we have to add in the fringe cost associated with labor, and that's the fringe related to direct labor and the fringe related to overhead labor. The sum of all that makes up the overhead pool. What's the base for overhead? The base for overhead is direct labor. The relationship we're assuming is that with each new engineer we'll have some cost for facilities and support, so overhead is a function of direct labor. So take the overhead pool divided by the direct labor, and that is your overhead percentage. Last, we'll compute the G&A rate. The G&A pool is the corporate costs, in this case G&A labor, G&A non-labor, plus the fringe on G&A labor. The base for G&A is all other cost excluding G&A. This method is called total cost to input. You can see here that the base for G&A is direct labor, direct non-labor, plus the overhead pool. Here you can see that we have the G&A pool divided by the G&A base to come up with the G&A rate. One critically important item to note: when we compute indirect rates and allocate cost, the totals should match the income statement totals. For example, in the income statement shown on the left side, you can see the sum of direct cost and indirect cost. In the pool allocations at the right side, this total agrees to the G&A pool amount and the base for G&A. Again, make sure you understand that this is only one method of computing indirect rates and that there are other ways to run allocations.